Good morning, guys. Welcome to this Wednesday, July 16th. I have to think about it for a second. Dang, it's already Wednesday. Damn, time flies, right? So, July 16th, Wednesday. Tells you, my brain is not quite there. It's like half the week is already passed, and it's as time flies. So, July 16th, news today is pretty much we're waiting for that PPI number to come out. And that's going to be the PPI and industrial production. That's the two big numbers coming out today. We had this Fed speaker early on this morning, but PPI at 8:30, industrial production at 9:15, Fed speakers at 9:15 and 10 as well. Oil report at 10:30, beige book at 2. I could move the market, depends whether it's I think 8:30, 9:30, 9:15 we have news. Not sure exact. I don't think the PPI is going to do much. I mean, you saw the reaction on the CPI number that usually gets big reactions. But then the numbers are getting pretty stable, pretty low, and I don't think it's going to be a huge market factor at this point. I could see the PPI number can bump up a little bit given the oil energy inflation we had for a few weeks here, but we'll see how that shakes out. Overall, though, market it traded lower yesterday. It had to do probably other stuff, had to do with these crypto bills maybe, and some other stuff driving the market lower because it sold off into the close after the last update. They did take out that 69 or 6,300 level, 62 and 90 level, and they really took it lower into the close. So that wasn't pretty. Took it a little bit lower at that in the overnight. Tested the 6250s in the overnight. They're definitely back below that 6270 for a while. Not trading right around it. So I would not be surprised if we get tests down here at the 6225 at one point. I mean, we are in a range. So we have been up here flirting with the highs. And so far, yesterday was one of those days. It started off with a nice little pop in the overnight. And the day session kicked in and we saw some weakness. And then we got more weakness in the afternoon. And it kind of never recovered. So I would say I would not be surprised if we really swing back and forth. Doesn't really change the analysis a whole lot. It may look like we are selling off, but it's not. It's just pretty much down here to that 60 to 62.25. Now, if that level comes out, that would be more interesting in terms of a move to the downside beginning. So I would be looking at buying all the way down here to the 62.25s. But to start off the day, at this point, we are starting off range bound, no particular bias. We took it lower, right back here to that 62.70 level. Overnight, pretty much stay stable. Attempt to take it lower and back up a little bit. So and no follow through on the downside, as far as I can tell. So starting off range bound, and at this point we have a pretty wide range, all the way up here to the 63.15. A nice ledge there, and then the next leg is 63.30. Level down is we have a nice ledge here at the 62.45s, and then the 62.25s. We got levels in between as well, but I think it's a fairly obvious starting point. So I would be looking at selling strength up to that 63.15. So at this point against the 62.80s, 62.90s, 6300, 63.15s for rotations back down. I would look to buy against support 62.70, 65s, 60s, 45s, 35s down to the 25s for rotations back up again. And fairly equally. I mean, at this point, I would have been more inclined to lean short earlier yesterday if they start taking when they start taking this lower. But at this point, we are pretty much right back in that attractor point in the middle, at the middle of this range. So it could swing it either way. We may get some strength, we may get some push to the downside. It just depends. Now we had earnings come out on Goldman this morning. That was spectacular, and yeah, they are making money on the trading. Go figure, right? And I heard it's a very interesting dynamic going on there. You have when people sell ETFs, like these baskets of stocks, these trade desks front run that stuff. It's with stock sales or purchases, and then when you have an ETF which has to sell a basket of stocks, they're on the right side of that trade every freaking time. So yeah, it's not quite just trading like we do. Anyway, so overall, I think so far the bank earnings has been pretty darn good. We'll see how it shakes out as we goes into next week. But earnings season is in full swing. So starting off range bound, looking to sell strength, as I said, 6280s, 6290s, 6300, 6315s for rotations back down. Above 15s, still looking for sell against the 25 and the 30s, 30, 35 here. But I would start leaning long above the 15s. I would just be a little bit less aggressive getting short against those areas. And on the way down, looking to buy against 6270s, 65s, 60s, 45s. If they get back below the 45s, I would be a little bit less aggressive. I would start thinking short side of the market, but it's uh, uh, I would still look to buy against the 35, 25, just a little bit less aggressively. Because once you get down to those edges and start pushing them, you're there. I mean, you're looking for that buying opportunity at the lower end or short at the upper end, but it's you never know if it's going to run the edge or not. We're going to be trading. We are our bread and butter trade is really to trade the failure because that's what happened most of the time. Most of the times it fails to take out an edge and it goes back. So, but the time it does, you want to be you don't want to get stuck in a move. And I don't think we have news right now, at least this morning, which is going to drive us out of this range. So it's going to be some other headline which could potentially do that. But there's plenty of fodder out there for headlines. There could be a bad headline coming, could be a good headline coming. You just never know. So that's how we get started on the ES flat out range bound. Looking at the bonds and the Nasdaq. So bond market, a little bit to the lower end, nice little move down yesterday, down here at the 112 level, probably within the overnight. And these guys are just not just down here in the lower end of the range. At this point, always we're still looking to buy against these support areas all the way down here to the 1120s. They start taking out the 1120s or 1116s, so probably the better one to lean against. But they have here 1126, 19 to 20, 14, 15. So these two support areas come out, I would be more concerned about the short side. We're still looking to buy against these lower support areas, but I would start off with a slight bias to the downside, given that they're down here trying to test these lower edges. So I'm going to sell strength against the 1208s. About 1208s, I'm going to be looking for retracement trade. See if they can take this all right back up again. It could be something here at that two little edge, but I didn't want to make this shoot too wide. But that just mind that little 1210 level. But I'm going to, if they take out that London high, I'm going to look for a retracement trade to the upside. Otherwise, I'll stay looking for a retest of that low at the 26, maybe even lower. And if they start taking it lower, I'm still looking to buy 1920s, 1415s down to, 1415s. And below that 1415 area, then I think we are heading lower at that point. And the bond market trading lower, it means yields kind of ticking up a little bit. That's the bond market, slight bias to the downside to get started. NASDAQ, that's the one which is swinging, right? Back and forth, but holding on pretty good given the moves. It didn't swing back as hard as yesterday, and that was primarily because NVIDIA can start selling chips into China. That was the reason for that overnight move as well. And then, of course, it took that back down again in the day session, and then a little sell-off into the close. But I would start off range bound on the Nasdaq as well. We are back down in this lower range. If you look at capital flows, so we're down in this lower range, but watch it. They're pretty right up here against that 23,050, 60 edge. Watch them. If they take out the 100s, we are on our way back up again. So I would say that this 90 edge or 80, 80 to 90 edge, that if they take that level out, I would be back on the long side and see how far they can take it. But initially, starting off range bound, looking to sell strength at 23,030s and the 80 to 90s for rotations back down. Above 80s or 80, 90 level, I would back on the long side, see if they can get this going again. And looking to buy weakness against the so we're looking for shorts against these two with a bit of caution. But above that 80 90 level, then yes, change your bias and let's start leaning into the long side. There could still be shorts against the 160s and the 23,200. That would be a lot less aggressive about them. Looking to buy weakness at 960s, 930s, 890s down to that 840 and the 800 level. uh, right down to that attractor, volume attractor at the 800. So that's what this level is right there. So they take that level out, I would be on the short side of this. We're still in a range technically until we take out that four-letter edge at the 590, 600. But depending on if they could be an edge building up here at the 800 to 820s. This area here could potentially start building up as an edge, and then make this a little distribution by itself. We will see how that develops. So far they haven't quite been down there, so and you never know. That could happen pretty quick that they run it down there. But at this point they backed off in the overnight, and we'll see if they can get scratch things back in action here today again. There's a lot of interest, a lot of news about the AI trade is very much alive and kicking, and that stuff is going to start moving. Remember that the AI technology, people are talking about it like people don't quite understand the whole thing and how big it could potentially be. And a lot of investors are just thinking, looking at it as a fad, right? It's like the internet was in the 2000s, right? That's kind of where it's at. So if you go back to the 2000s and think about how you operated the internet, how clunky that was, that's where AI is right now. And look at how we are using the internet right now. And the AI is going to be a lot bigger than that. So it's going to be a ride for sure. Anyway, so I would start, I would be looking to buy weakness, as I said, 960s, 920s, or 30s maybe, 900s, 850s down to the 820s for rotations back up. Below that 820 level, I would be looking at the potential retracement to the downside. Initially looking to sell against these two areas, but if they take out that 80 area, 23,080s, I would be go back on the long side and see if it can go back higher again. We'll see. All right, so that is the Nasdaq and the bonds. Finally, oil and gold. And remember, we're rolling oil on after the 17th. I checked that yesterday. I put in new expirations and stuff yesterday. That's a pain in the butt to do, but you had to do it. So a new expiration is all heading lower. This was my edge in the morning, and now they're taking that out, heading lower. So oil is starting to come apart price-wise, and that's exactly what we would expect. So the move to higher on oil, it's always confusing. I mean, after the Middle East situation was settled and the Iranians were taken out of the game, that's where I was expecting a lot faster decline of oil prices. But we'll see. I mean, they still have to take out that 64 edge. That edge comes out, I think we are well on our way to the downside. But at this point, that's still just range bound. So I would start from the short side, just given the last 2 days of trading, or 3 days, I should say. They have one big move down, a little consolidation day, now another leg lower in the overnight. Even if you can keep that going, we may see a test of that 64, 64.50 level. And then this is this low volume area right here. So if that comes out, I think we're heading lower in a much bigger way. But initially, as we say, we're looking to buy failure to take out that edge. So we're looking to buy against the 65.20s, 64.60s down to the 64s for rotations back up. This edge they already took out, so that's not valid. If you get some early strength, I would look for shorts against that 65.80s, the 66.20s, 66.50s up to that London high at the 66.80s. But above that one, maybe the 67. So these two resistance areas, if they come out, I would be at back range bound again. So we will see if this little move to the downside has any legs. So that's kind of oil right now. But everything they're doing right now, the energy is on the top of the ticket. They're doing everything to increase energy. So that's going to definitely put pressure down on oil prices. Finally, oil and gold. So gold, not going anywhere right now. They're kind of stuck in that, or they were attempt to take it higher. Let me find my capital flow chart real quick. There it is. So we're rolling end of July to the December expiration for gold. It's going to happen on I think the 29th, July 29th. After that day. But then you can see here, we were up here flirting with these highs on gold, and the upper end of the range, we're right back to value. So we are right here at the 33.40s. I would start off range bound on gold. Fade the edges. You have an upper edge here at the 70s. You have a lower edge down here at the 3300s. So that's our area to work in. So starting off, looking for short setups against the 3350s, 60s, 70s, maybe up to the 75s for rotations back down. Looking to buy against, I would say 3330s, 26s, 20s, 15s, 10s, down to the 3303s here. So pretty wide range, $70 range, but they have, as you can see, they can move pretty good around that range. So I would just stay range bound, fade the edges up to that level, the 75s, buy down to the 3300s, and yeah, you have the levels right there to lean against. So that's pretty much gold. Start off flat out range bound on gold, slight bias to the downside on oil, and let's see how they can how that whole thing can develop here. All right, so that's oil and gold. Back to the ES, and we got about 8 or 9 minutes until we get the PPI number. So, and yeah, it's time to trade higher. So we'll take it. But then again, I mean, unless they take out that 63.15, so I'm gonna just be range bound on this. And the Nasdaq hasn't quite moved a whole lot either. So that's how we get started. Then we adjust from there. Ready, guys? We'll leave it there. Good trading. And I'll see you back at 11:30. Good trading. There you go.